Did you know that the average price for a detached home in Greater Vancouver was just around $80,000 in 1997? By late 1980, the average price for a house had risen to almost $180,000. The reason for such a price spike was due to massive inflation in the United States and Canada. When interest rates were over 20% in early 1981, the real estate market in Greater Vancouver was crushed, taking home prices down by 50%. For the next 5 years, from 1981 to 1986, the real estate market in Vancouver was flat. The Expo of 1986 in Vancouver brought in over 20 million visitors from around the world. Since then, the Vancouver real estate market made some steady gains in home prices from 1986 to 1994. In the early part of 1990, many of the active home buyers for properties in Vancouver were from Hong Kong and Taiwan. They were moving some of their money to Vancouver in anticipation of the handover of Hong Kong back to mainland China in 1997. From 1994 to 2001, the economy in British Columbia was not in very good shape. During this period, home values in Vancouver dropped about 17% to 18%. The decline was also caused by money leaving Vancouver when the economy in Hong Kong picked up, and business confidence was growing again after 1997. The golden years of 2001 to 2008. There were two major events that changed the real estate market in Greater Vancouver. Firstly, there was a change in the BC pro-Labour NDP government to pro-business BC Liberal Party, led by former Vancouver Mayor Gordon Campbell. Secondly, the dot-com burst of 2001, and the World Trade Center September 11 event, had resulted in the U.S. dropping its interest rates. The Americans were afraid that the Dow Jones would crash. The U.S. stock markets were shut down after the September 11 attack, and it was only reopened 3 days later the following Monday. The U.S. dropped their interest rates 1 full point that week, and the Canadians followed. Within the next 1.5 months, both the U.S. and Canada dropped their interest rates another 1%. With interest rates in the mid to high 3% range, the Vancouver real estate market took off. The housing market in Vancouver continued to make new heights until 2008. The credit crunch of 2007, caused by the U.S. banking meltdown, resulted in the Vancouver market following the U.S. market crash. The housing market crash lasted just about a year until mid-2009. By the end of 2009, the Greater Vancouver and Fraser Valley housing markets were back to where they were before the crash, and gained higher heights for many more years. There was a lot of speculative buying, and home buyers were fearing of missing out, fueling higher prices. Home prices continued to go up for many years, gaining almost 50% during that time. In 2016, China's capital control was put in place, curbing the outflow of money from China. In 2016, the foreign buyers tax was introduced by the BC government. Other measures included a vacant home tax, stricter B20 mortgage qualification rules, increased property transfer tax, and a speculation tax. All of these government measures are having an impact on the housing market. The higher-end market suffered the steepest decline in home values. Greater Vancouver average home price around $1 million, is at 14 times average household income. At this level, housing is highly unaffordable for the average family. For now, the BC housing market is supported by low interest rates. But, unaffordable housing costs are a major drag on the economy. If you are thinking of buying or selling a home in the Greater Vancouver area, kindly contact James Wong at 604-721-4817 and his team.